G'day everyone, welcome back to Pete's Investing. Today's May the 19th, 2023. This is the spot silver price update. We've got the weekly showing a neutral positioning at the moment, and on the daily it's showing a bearish signal. So we only take short trades on the lower time frames if you prefer. I prefer to trade when both the weekly and the daily are aligned, but let's look at each of these. So for those new to the channel, we look at the triple moving average of the price chart. It's moving average 3, 5 and 60, and we compare that to the moving average 5 and 50 of the CCI 150. When they're aligned, like they were during that period, it shows a bullish signal. When they're bearish, it shows a bearish signal, and when they're neutral, meaning they differ to each other, it's a neutral signal. So I prefer to trade when they're both aligned on the weekly and the daily. On the daily, you can see there that's showing a bearish signal, so you can trade lower time frames, but with a bit more caution than otherwise. But at the moment, we've got this support down here at 1991, a key resistance up here at 2607, and we did have there's got these diagonal trend lines cutting through the chart. I'm going to leave those in there. We've also got this other diagonal at the bottom here. And now I'll leave those in there because they do cut through the chart longer term. You can see there if I zoom out, because they often generally gravitate back to those levels at some stage. Now also, we did look at our previous couple of videos. We did have this divergence playing out, a bearish divergence on the CCI versus a flat or a bullish divergence on the price chart. And the way you trade that is you place you draw a channel in the range where the divergence was occurring, in that range there. So the channel starts up there and to the lower level there. So when the price breaks to the downside, let me get rid of this channel here because it's causing a bit of confusion. So you see that channel there between those highs and those lows there. So when the candle breaks below that channel, like it did there, you would have gone short, and the target area I do place would be the closest Fibonacci level. So in this case, the 38% at 2375. Let me just draw a little box highlighting where the potential initial target range would have been. You can see there, it initially on our last video initially bounced off that, and it's broken through to the downside in this range of our target level. So that would have been a nice little trade to take if you were trading that divergence. Now, with these divergences, that doesn't mean it's a long-term correction to the downside and a bearish reversal from where it was previously during this period. It could mean it starts bouncing up from here. It just means it's a bit of a slight correction possibly, but there's no guarantee it's going to continue to the downside. So that's why I'd be a bit more conservative and place early stage targets without being too ambitious. So at the moment, it's still showing a bearish signal on our daily. But you can see there's a slight bullish candle. So if you've made that little trade, that'd be a nice little area to get out of with some profits. Now on the hourly, I've got here to understand how to trade this properly, you would use the same logic as you would with the weekly and daily CCI and moving averages, and you place a trade. If you're going long, you place a trade when the candle breaks above the fractal, and go short when the candle breaks below the fractal. Now, what I've got as well, back here you can see there I'm trading this average down approach, and I've left this in there deliberately. Had you traded this with $100,000 capital, you would have used up all your capital because the price was going against you. Now the reason I've left that in there, it shows the effect of what happens if you don't follow the rules. So what I mean by that is, again, this program runs throughout the whole time period. There is no discrimination between weekly and daily trends. So what I mean by that is, you can see there when it starts breaking to the downside, to go short, you don't take any long trades. So that would have been back there during April 22. So if I go back to April 22, you can see there's no long trades during that period. And going back to April 22 here, you can see there are a couple of long trades there during that period, but not during this weekly period. So again, I prefer to take these trade strategies when the weekly and the daily are aligned. So potentially you would have gone long during that period there. The weekly was long, and that was during that same period on the daily. You would have gone through those periods there. You would have taken those long trades. So to understand how to trade this and other trading strategies, reference the links in the description below to access my Patreon page. We also do some weekly scans of stocks, currencies and commodities. Subscribe, like and share the channel. Thanks for watching and see you in a future video.